10 years ago, global financial markets were in meltdown mode and everything was falling apart. The system was broken, and a lot of that trust that had been earned was no longer there. Too many liberties were taken, and too many false assumptions were made, with greed at the center of it all. 10 years ago, as all of this was going on, a paper was sent out to a small forum, a paper born out of a rejection to the broken system, and a paper that would change the way many would think about the path forward. The paper would introduce the idea of a trustless, anonymous, peer-to-peer currency running on a decentralized, distributed ledger known as the blockchain. This new payment system would involve no third parties, would be frictionless and borderless, and would not be subject to the control of outside bodies whose interests were not aligned. Anyone could participate, and transactions could be made between any two parties in the world without needing any third party to confirm such a transaction. This paper would have the benefit of being perfectly timed and elegantly wrapped in a PR masterpiece, with an accompanying mystery of an author who we still do not know to this day. The currency born to the public on October 31st, 2008 would be called Bitcoin. On January 12, 2009, the first Bitcoin transaction was recorded, though it took some time for the first real transaction to be recorded on that famous day of May 22nd, 2010, when 10,000 Bitcoin were used to purchase 2 pizzas. Today, after a plus 70% decline in the price of Bitcoin, those 2 pizzas would still be worth $65 million. And now, 10 years later, through many ups and downs, we're still not sure what will be with Bitcoin and if it and the technology it rests on, called blockchain, are the answers for transactions in currency going forward. While it's clear the idea of cutting out unnecessary costs and giving more control to those in possession of a currency have its advantages, there are still many drawbacks that have yet to be worked out. The idea that third-party involvement in transactions is all bad is not exactly fair, as we have seen with Bitcoin in a world that has been riddled with security breaches that have resulted in millions of stolen Bitcoin with no recourse to be had. Even the maintenance of a wallet address with no third-party involvement has proven to be a challenge for many, with no ability to recover your Bitcoin if that cold string of cryptographically secured numbers and letters making up the virtual wallet is lost. The idea that currencies can operate without any form of regulation has also been called into question, and while privacy has its merits, what good is a system that relies more heavily on privacy for its criminal purposes than for its legitimate purpose that would protect someone from needing to disclose information they have legitimate reason to keep private? Moreover, we still have yet to see Bitcoin get to a place where it's capable of handling transactions per second that come anywhere near existing solutions. This leaves the cryptocurrency in what is still a test phase that must be able to deliver in this area to gain the adoption it so desperately craves. To this point, participation has been all miners, who ironically control most of the flow in this decentralized currency, and speculators who aren't all that interested in anything other than making a quick profit. There have certainly been some amazing advancements with respect to the rise of the smart contract and decentralized applications that offer added dimensions to currency that extend beyond conventional definition. Bitcoin has opened up the door to an idea of currency that extends beyond the monetary and into the interactive and social. It has ushered in a new kind of economics in which alternative currencies in the form of tokens can afford opportunities in ways that empower people to be doing things they love while being rewarded for transacting in these tokens. That is what is known as tokenomics. And so 10 years down the road, we still are trying to figure it all out. But what we find interesting about all of this is the fact that 10 years down the road, the global economy is trying to figure it all out as well. Bitcoin's euphoric ride in existence has directly coincided with the euphoric ride in existence of traditional markets over the past decade. This was the decade in which risk-correlated markets were designed to only move in one direction on a reckless incentive offered by central banks and governments in order to stimulate the global economy back into a recovery. But 10 years later, the traditional system has initiated the normalization process, a process in which all of that reckless incentive to be long these risk assets is being removed, and the market will once again be required to stand on its own 2 feet. Now that rates in the US have finally moved back up to a point where it can actually be felt, we're seeing what it looks like when central banks and governments are no longer there to hold the hand of the investor. So before we are critical of Bitcoin and what could be argued as a slow go over the past decade, we should also be mindful of a global economy that has had every benefit over the past decade, and that only now will be forced to face some of those realities that were put on pause for 10 years. What we find most interesting in all of this is perhaps the correlation between Bitcoin and global equities over the past few weeks as stocks have begun to capitulate. While US equities have already come off some 10% from record highs, Bitcoin has held steady above 6,000. We recognize Bitcoin has already taken a hit to the tune of over 70% from its record high, but we also would put a lot of that pullback off that record high to FOMO trade that blew up at the end of 2017 as Bitcoin burst onto the mainstream. If we cut out the rally in that fall of 2017 move, we're now back at levels we had been trading at into ahead of that wild run, which makes the price feel a whole lot more stable. The point here is that the pullback was less a function of a lack of faith in the currency and perhaps more a product of what is sure to be in a scenario where a currency has been appreciating at the dramatic rate that it was. And we would add Bitcoin has demonstrated its resiliency in the past as well. There have been many instances over the 10-year period where Bitcoin could have easily been forgotten, and yet it has stayed the course while inviting a whole new world of cryptocurrencies along with it. So while it is early in the game and there very well could be added downside pressure if the liquidation in stocks persists, as we believe it still can, to this point, since stocks have fallen off, Bitcoin and cryptocurrencies have held steady, which is certainly a positive for the space. When we look at the price action, that relationship between Bitcoin and volatility has changed quite a bit in 2018. As the year got going, Bitcoin was seeing weekly ranges of well over $3,000, getting up over $4,000 into the first quarter. And yet, since the first quarter, volatility has come in and ranges have contracted dramatically. Weekly ranges right now are sitting at about $700. Technically speaking, the contraction in range has taken the form of a triangle, with the price trading into the apex of the triangle, a place in which volatility has a way of working its way back in. The key levels to watch right now come in by the 2018 low, which comes in around 57.50, and the August high around 8,500, which acts as a well-defined lower top, maintaining the integrity of this existing downtrend. If Bitcoin suffers another blow, it will be the break below the 2018 low that triggers this blow, which could then open a further decline that exposes the September 2017 low at around 29.75. If, on the other hand, Bitcoin breaks up through the August lower top first, this would be a very constructive development and would have the cryptocurrency running back in an uptrend again. But even if the drop does continue and we get a fall into the $3,000 area, this will still have the market at impressive levels for a currency that was born out of thin air. And we would even argue such a pullback could be compared to a pullback in the US equity market that has the S&P 500 trading some 30% off its highs in the weeks and months ahead. Why? Well, such a pullback in stocks would have the market trading at record levels set some 7 years after the crisis of 2008. So as bad as 30% may sound when put into context of what could have been, if trading back to record high levels of 2015 is the worst thing through this normalization process, it will be an impressive feat in our view, all of which supports the idea that even $3,000 Bitcoin should not be viewed as a failure by any stretch. And so we're here wishing Bitcoin a very happy and healthy 10-year birthday. We still don't know who the creator was, and the debate and mystery around Bitcoin's genesis will keep on much in the same way that debate and mystery surrounds another genesis we all know of. At 10 years, it would make sense to see the currency still trying to figure itself out, especially if it delivers on the promise of being that next great advancement in technology. Whatever the case, Bitcoin still stands and does so after suffering another big blow into 2018. So let's see what the next 10 years bring. Happy birthday, Bitcoin.